I'm Rick Murphy, CEO and founder of Cogent Growth Partners. If you're a technology services provider or an MSP thinking about growth, acquisitions, and how to achieve a realistic liquidity strategy or an eventual exit, this show is for you. This is Cogent Conversations.
I want to talk now, Rick, about market and timing. So is the MSP selling because they're peaking or they're declining? Because buyers can tell and diligence can tell as well.
Ooh, that's a really good question. So I just got off a discovery call a few minutes ago with a company I talked to about 2 years ago, give or take. And they are actually in the cyberspace, right? And so, you've got the MSSP space, the managed cyberspace. You've got the pen testing people and the consulting people. And so you would think that business is sort of on an upswing, right? But you talk about timing. The biggest thing that we talk about with everybody, wow, Rick, it's great to talk with you, but I'm just not ready yet. Right? I'm just not ready yet is probably the biggest thing that we deal with on an everyday basis. When we meet someone, we do what we call a discovery call. We're having that first call with somebody that's M&A curious, right? I know you like that phrase, but we use it a lot. I was using that a little bit in the previous call. But we're talking to M&A curious people who they're not sure that they are ready to do something in the space yet. And, the real issue from timing is a lot of times I've got this magic number in my head. My partner, George, calls it, a boat anchor, because you get this anchor number in your head, and I'm going to sell when I can make $3 million. I'm going to sell when I'm going to be $10 million. And I used to tell a story. It's been a long time since I told this story, but the short version is one of my first ever clients in the space, first ever client. It was a small company when we first met. It was my very first client in the space 16 years ago. We're 16 years old now, as of a couple of weeks ago. So if you're reading this in the future, that's February 26th. We've become 16 years old.
2026.
2026. Excuse me. Thank you.
Yeah.
So the idea of having a number is something I think it's almost like a real estate thing in people's heads. Once my house is worth $1 million, I can sell my house. Because I've got equity in it. And they look at their business similarly. It's like, hey, what's my business is worth $10 million? Well, that's going to be enough money for me to retire. And that's how I'm seeing my retirement work. And what's it going to take to get but they don't often think about what's going to take to actually get your business to $10 million in value, right? And you can reverse engineer multiples. There's lots of different ways to think about it. But at the end of the day, what happens is it becomes a bit of a crutch, right? Because they're never ready, and the business it's hard to grow a business organically. It's hard to keep adding free cash flow to your bottom line, and grow sales and hire more people and do all the things you need to do to get your business better. So the timing is really mostly mental. There's nothing in the market that's really preventing people from wanting to sell or buy. Tariffs is just a bunch of hooey in terms of, it's not interrupting the market to the best of my knowledge. If you're buying a lot of equipment from overseas and your business is all around stuff that is tariffed, well, then, the tariffs are going to affect your business. But, an IT services company is not really, tariff dependent or dependent on interest rates. I mean, most people aren't really borrowing money to do IT services. It doesn't rely on lending to have an IT services company service you, or to have an IT services company servicing somebody else. I don't need to go borrow a bunch of money to do that. I need to make money, but and to pay my people, but it's not really market dependent in that way. Does that make sense?
Yeah.
But so what happens though, is it's really, it's a mindset. And I need to have this much money before I'm going to go ahead and sell my company. A lot of people, I think, misleadingly are being taught about exit, and I'm a big proponent of liquidity. Like liquidity is a liquidity event is really more what you're looking for as a business owner. And a lot of the pro way is you've got multiple liquidity events. I've grown my business to this big. I've taken in some investors. We're going to keep growing it. And now, a private equity company's coming in. They've invested in the company, and we're going to keep growing it. And we're going to now have more money to do acquisitions, and we're going to have more money to grow organically, so I can afford to hire extra people that I couldn't afford yesterday. And we're going to have a new geography that we're going to start selling into. And so it's really about your mindset on being ready. And so we teach that a lot in terms of saying, look, don't get all anchored up on a number. Uh, run your business. We talk about this all the time, and you can certainly look it up on our website, but run your business like you're going to sell it tomorrow is a lot about making money now. Like, go ahead and be profitable now. I can't tell you how many people we talk to is like, oh, I'm investing in my people. Well, are you investing or are you speculating? Right? Because if you've already made a bunch of sales and you've made sales and you've got to go fulfill those sales, well, that's investing in people, right? Because you've made sales and I got to figure out how to fulfill them. As opposed to, I just hired a new sales crew or pick any crew. I just hired these new people and we're going to make more money with them, but you haven't yet. That's speculating, right? You're guessing because you don't know that you're going to make those sales that you think you're going to make. So, are you really speculating or not? And it comes all back into, am I ready yet? Because I've common story. I've been investing in my company for the past few years, which is code for I really don't make a lot of money, right? Because they're not really focused on profit. They still might have top line disease. There's lots of things they could be suffering from that they're just not ready yet because they're still running their lifestyle through their business. We've seen people where they have family members on payroll just so they have a 401k as a it's just there's all kinds of stuff we're going to talk about over all the different episodes we're going to have. We'll have some guests on to talk about other things like that in the future. But I think that the straight answer to the question is it's not about the market; it's in your head.
Yeah, are companies better off, setting 12, 24 months with focus and pausing and kind of reinvesting and preparing to sell their company?
Yes and no. Again, under the idea of run it like you're going to sell it every day, any day now, you're making profit every day, and you're focused on the company making money and doing well and growing organically and making sales and doing all the things that you need to do as an IT services company. In being more intelligent, new tools, and using your current tools better, and all that kind of fun stuff. Implementing AI, that's a whole different set of podcasts for us. We can talk about that ad nauseum some other day, but I think that company I was just talking to hired a new CFO and has been redoing their financial overview, has been doing different things like that to run the company better and make more profit on the one hand, but have more forecastability, being able to see more into the future, be able to plan better, be able to plan expenditures better. As you get bigger, it's harder to make money. It's harder to make, you can make a 20% profit on a $2 million business is one thing, but continuing to make 20% profit on a $20 million business is a whole different thing. It's a lot harder to do. If you just think about exponentially making, how many new sales do you need to make to continue to achieve 20% growth? 20% of a $2 million company is a much smaller number than 20% of a $20 million company. Right? So where do all those new sales come from if you're into doing math, right? So the idea of before you sell, getting your financial house in order is certainly very advisable, but you want to do that anyway. That's the thing I like. That's such a trick question, right? Does that make sense?
Always want to do that.
Yeah, you just always want to do it. And that's one thing that holds people back. I got to wait. I'm not ready yet. I don't have my number yet. Well, golly gee whiz, it's because you're not making a lot of profit now and you're kind of cowboying the company a little bit. And yeah, you might need to invest in some people that might cost you some money for a while, but you want to make sure you're making an investment and not speculation, then that it turns into something. And so how do you measure that? So that has to be measurable. It's not just what smaller companies how much am I putting in my pocket is the measurement. But slightly larger companies, or as you get bigger, that's not really how you want to measure it. It's not about what goes in your K1 if you're if you get a K1 or what you're doing for distributions or paying yourself an exorbitant salary. It's about the company itself being actually fundamentally profitable and hopefully double-digit profitability. You certainly want, if you're in single digits, you don't want to be in single digits in this space, in the IT space. You want to be in the double digits in profit. A good company is doing 12 to 15% to the bottom, literally to the bottom. Wow. And then, you've got companies that are doing 15 to 20% to the bottom. We see that a lot. That's a good company. It's a well-run company, making money, doing good things. And we see companies that are doing 25, 30%. Where it starts actually becoming unbelievable. You've got, a buyer might look at a company going 35%. It's like, well, how the hell are you doing that? We're only doing 20, which is great, by the way. And compared to other industries, is astronomically wonderful. It's one of the reasons I like this space, actually. Does that answer your question? Did I do that right?
Yeah, absolutely. Oftentimes when I talk to these businesses, MSPs, I often wonder, do they really understand what buyers are actually paying for in your business? I think it's important for them. It's right. It's not just revenue. There's so many other factors they should really, really focus on.
Transferable customer relationships is the real key, right? So if you think about what you own as an MSP owner, an IT services company, technology service provider is one of my new favorites, a TSP, right? So if you own a TSP, even though you might have a 3-year uncancelable customer contract, which is a lovely thing to have, most companies don't. They'll have like a 1-year agreement with like a 90-day out or a 60-day out or a 30-day out. There's lots of companies we talk to that say, oh, and they kind of brag about it. So, well, we don't use contracts. Our customers love us. We don't need contracts, which is not really good for a resale thing. Again, that's probably a whole nother show. But, the general thinking is being able to say, okay, I've got the ability to focus on transferable customer relationships, because even though you have a contract with somebody, you can't make them stay a customer. You're only as good as your last service visit, as your last customer interaction. And that's a universal truth. Out of pretty much any business you can think of, that's the truth. But in the IT services space, it's extremely valuable. That is the thing you're selling, is your people are going to be, most of the deals we do are talent acquisitions. It's a misnomer that you're buying a book of business. We almost never do that. All of our clients are, you want the smart people. All the smart people are employed. And the best way to grow your company is to acquire other smart people. And a lot of times the business owners. A lot of people think, well, you buy a business and you fire the business owner. Well, no, in this space, not really. You can, it happens, but really, you've got all these smart people. You want to keep as many smart people as possible. If you're a good business, a professional business owner or a mature business owner wants as many smart people as possible and smarter than them. Certainly how I operate. My people are smarter than me.
Me too. Yeah, got to be humble.
Well, you'd got to be, but it's realistic. Is transferring the customer relationships. If I have to transfer them because you're going to go away, is a risk, and it limits your value. But it limits how valuable you can be. The most valuable business is a business where a management is coming along for the ride. And they're going to come and make a new home with the buyer and make a bigger, happier family. Those are the ones that are the most valuable. This is Cogent Conversations.